Perhaps Bob Bassani knew, because he knows all, certainly when it comes to the markets. Let's get over to Bob.
Helicopter ditching training. I wish I was there for you on that one, David. that I want to see. Give me the outtakes.
We have it, Bob. We're going to show it. We are going to show it.
See, now that I want to see for sure. By the way, you look great in dark sunglasses and a hard hat. So we were doing fine until Microsoft came out a little after 9 o'clock. We lost 20 points on that, but it's not that bad right now. Just take a look at the sectors. Materials are having a great day. Mosaic's doing great. Some of these other big names that are out there doing great in that group. Nucor, Freeport-McMoRan's having a great morning. Industrials are great. Caterpillar, Honeywell, Boeing doing really well. Energy taking a little bit of a breather, of course, as oil was down. And you see the modest move down in tech. Just take a look at mega cap here. Microsoft is costing about 45, 50 points on the Dow right now. Not that dramatic. Remember, you're talking about, maybe 2% on in terms of how they reduced their earnings per share estimates for the quarter. And this was on the dollar, not on a fundamental thing. So modest move in the rest of the tech sector. Elsewhere, you see some of these food stocks that are a little bit weak here. I see Hormel made some comments. Bird flu could hurt supply chain for turkey here. So, yes, there's consumer stocks are a little bit to the downside. So Hormel, Tyson, some of those other food names to the weak side here. As for what the market wants right now, there's two things the market wants. Number one, it wants the supply chain issues to ease up, and it wants a soft landing. So the supply chain, there's been some pretty positive comments in the last few days. You see Daimler Truck said they're pushing past the chip shortage. You see Foxconn, it was a few days ago, but they said the manufacturing is at more normal levels. Volkswagen talked about better semiconductor supplies. So it's trending. The news is trending better in this area. The real problem the market's got is the Goldilocks problem. That's what I call it. To get a soft landing, you need Goldilocks. What's Goldilocks? It's just right on the data that we need now. So that if the data is too strong, the Fed is going to keep hiking. Put up the next full screen there. And if the data is too weak, we have recession fears. So people are having a hard time putting this all together. And the problem is there's not a cohesive narrative. So everything keys off of the inflation data, essentially. So yesterday we were down because the ISM was too strong and everyone was afraid of the Fed was going to keep hiking. Today, ADP showed job growth slowing. Obviously, the market's a little more concerned about the Fed hiking at this point here. So Friday's economic data is going to be really important again. So we want to show slowing, but not too much slowing. So ISM services, we want 56. That's fine because it's down from April and 57, but it's still up. It's still growth over 50. Non-farm payrolls, 328. That's Goldilocks because it's lower than last month, but it's not really dramatically lower. So we've got to figure out if we can get strong numbers from these. If we get really strong economic data way above, David, we're certainly going to roll over again right now. It's just a very difficult, confusing time getting the narrative straight. But again, Goldilocks, let's get things right in the middle, and the market will be fine. David, back to you.
Bob, thank you.